A Beginner's Guide to Investing in the Stock Market and Mutual Funds. Well-written and detailed post. Thanks. Now is always the right time to invest. Great read. Thank you. Greater than deciding on the goal is crucial, since it allows the investor to think of a proper plan. Also, having a set goal in mind helps you move out of equity and into safer instruments like bonds well ahead of the goal. Greater than mutual fund investors often have the nagging doubt of whether they have chosen the best mutual fund. For a fund to be the best fund, the fund manager has to do a good job and the market conditions should be good as well. So, the investor has to put their faith in the fund managers and the market. If you find yourself struggling to trust any fund manager to give you consistently good returns, invest in a broad market index fund like Nifty or Sensex. This is personally why I prefer index funds. The Index Revolution and the SPIVA reports suggest that over the long term, beating the index return-wise is almost impossible. I do not fully subscribe to this idea, at least not yet. I believe that in the current Indian environment there would be funds that could maybe beat the index even over the long term. This belief in active investing is important even for passive investors, as passive investing only exists cause of active investors. All that being said, I strongly subscribe to the idea that for mutual funds, when comparing investor returns instead of fund returns, passive investors will outperform active investors. This is because of the point op mentioned that staying invested in a fund during its bad times is difficult. But the solution is not going the exact opposite route and staying invested in a fund whatever happens. Deciding when to move out of a poorly performing fund is just as hard. This leads to most investors hopping in and out of funds, which leads to reduced investor returns even if the fund themselves had good long-term returns. I would have added one more point to ops list. Rebalancing. One of the most crucial elements in investing in stock market. Unless you're 100% in equity, rebalance your portfolio, stay on track. https://www.investopedia.com. Investing, rebalance your portfolio, stay on track. One of the biggest advantages to periodic rebalancing is that it takes emotions out of investing while simultaneously helping in profit booking. Have preset rules that you'll rebalance only once a year or twice a year, or if your asset allocation deviates by more than a certain percentage. Or have preset rules on what to do in case of a market crash. Example, rebalance in case of a 20% fall in equity. This also ensures you still have money left over for further equity shopping if the market further goes down. Closing parenthesis. How to invest in index funds. I find so many funds when I search for Nifty. Nifty Bs for example. Don't worry too much about which index fund. All of the Nifty funds will give around the same return and all of the Sensex ones will give around the same return. Over the long term, Nifty and Sensex will give around the same return. Just decide on which index you want to invest in. Nifty, Sensex, Midcap 150, Smallcap 250, S&P 500, Nasdaq, and select the fund having the maximum AUM. For Nifty I would suggest UTI. For Sensex I would suggest HDFC. For ETFs, I believe Nifty Bs is the best. Though I don't invest in ETF myself, I prefer mutual funds. This study by Kuvera. https://www.bloombergquint.com. Mutual funds. The Mutual Fund Show active versus passive investing amid virus turmoil. Shows that only 1 out of every 6 or 7 investment portfolios outperforms buying and selling Nifty 50 index instead. For Indian markets, I took past 10 years of data and compiled annual returns over the last 10 years and the standard deviation of returns. Large caps, N50 and NN50, have given consistently better returns with lower risk. I tried to attach Excel image showing returns of different indices over time, but it is not allowed. Anyone can guide me on this? I have a question, for beginners and especially not that high net worth investors. Is it good to invest in obscure penny stocks? I ask this because good stocks that seem most likely to provide assured returns are often pretty expensive, and even if they move say 5 to 10%, an average investor doesn't gain much because he can't have enough of those shares in the first place. In case of cheaper stocks, while the risk is there, the possibility of returns is also better. The downside could be they may end up on the other side of some market player, pumping and dumping. Do you think it's advisable for beginners to own cheaper, lesser-known stocks? Greater than in case of cheaper stocks. While the risk is there, the possibility of returns is also better. The possibility of returns are also high when we buy a lottery ticket or when we gamble at a casino. It's not wise, especially for a beginner, to lust after high returns. Greater than the downside could be they may end up on the other side of some market player, pumping and dumping. That's not the only downside. The stock price can keep on going down. The stock may remain as a penny stock forever. The company may go bankrupt, wiping out all of the investors' money. Greater than ood stocks that seem most likely to provide assured returns are often pretty expensive, and even if they move, say, 5 to 10%, an average investors doesn't gain. You're gaining 10% return on investment for doing no work. Isn't that a good gain in itself? It's better than a FD return. Such a return beats inflation. The stock market is not a get-rich-quick scheme. Greater than, do you think it's advisable for beginners to own cheaper, lesser-known stocks? No, it's not advisable. A beginner investor won't even know which lesser-known stock to buy. Greater than, to avoid this, have a rock-solid emergency fund. Keep 5% of your net worth in low-risk liquid assets that is unrelated to the stock market. What good low-risk liquid assets are available? I currently use bank FDs or keep in savings account. I am eager to know what others prefer. Bank FDs and saving account, in a reputed bank, are the safest place to keep the emergency fund. The money is available to us instantly. Investors also keep it in insta-redemption liquid funds. Some even keep it in low-risk debt mutual funds. Thank you for providing this info. It's really helpful for newbies like me. Are lump sum investments better or SIP? If the former is better, why? Sorry, I'm a noob here. If you have a lump sum available, investing the lump sum is better, provided you don't need the money for several years. Investing the lump sum right now means that more money will stay invested in the market for a longer time. So, you'll get more gains. But, lump sum investing is slightly more risky in the short term. But it's beneficial in the long term. Lump sum investing and SIP investing aren't mutually exclusive. An investor could do both. When an investor receives the monthly salary, SIP can be done with that money. When an investor receives a yearly, half-yearly bonus, lump sum investment can be done with that money. Can someone please explain the difference in strategy for 10-year goal versus 20-year goal? The main difference is in risk management. For a 10-year goal, we can invest in equities for 6 to 8 years, and then gradually move the money to safer investments like FDs or debt funds. For a 20-year goal, we can invest in equities for 16-18 years, and then move to safer investments. Even if we face a market crash in the 10th year of our investment, we can continue to invest for a few more years. Hello all, I'm new here and right now I just want to know what can I do with my current scenario? So, my mother went to Angel Broking and opened a Demat account there. She put in 15K funds, from which she chose Bob, Yes Bank, PNB. The 5K was supposed to be my balance, right? A year has passed. All the above-mentioned shares are in the dirt, from the highs at the time of investment. Now I'm using her account, and I have some questions. Earlier I used to think after watching many lectures on investments and whatnot, I was ready. But in reality when I started using the account I had no idea what I was doing. The stocks I named were just bought. IDK if they're intraday or something else. Any guidance you provide would be priceless. 1. When I want to sell X. PNB, will I lose even more money? 2. What actually happens when a stock is bought at X 90 rupees and sold at 15 rupees? 3. How do I change the broker as I don't really trust Angel Broking? 4. What happens to the additional balance of 5K in the account? There are even more questions. But I'd be grateful if y'all help me with these first. Thanks a lot. Greater than the stocks I named were just bought. IDK if they're intraday or something else. The stocks are not bought in intraday, since the stocks are held in the Demat account for a year. Primarily, stocks can be bought in 2 ways: intraday, margin intraday square off, and delivery, cash and carry. Research more about what those mean. Greater than when I want to sell X. PNB, will I lose even more money? Depends on the price at which you sell. Greater than what actually happens when a stock is bought at X 90 rupees and sold at 15 rupees, 75 rupees is lost. When we buy a stock for 90 rupees, we pay the money to someone else and they give us the stock. When we sell the stock to someone for 15 rupees, they pay us the money. The price of a stock depends on a variety of factors. Greater than how do I change the broker as I don't really trust angel broking. Sell everything, eventually. And close the Demat account. Create a new Demat account with the broker of your choice. Greater than what happens to the additional balance of 5k in the account. The money will probably be there. You can withdraw it. With regards to selling the stocks, I would suggest to wait for a little while. If you sell it now, it'll be for a massive loss. Wait a couple of months, and see if the prices go up to an extent. The banking stocks are gradually recovering from the crash. This might not be said enough, but the right mindset. Stocks are always a gamble, which means loss is inevitable. Carry the risk of loss on your shoulder. Even the most stable company can have fluctuating share prices given the circumstances. Start by having a PAN card and all necessary documents on hand. To create an online Demat account, thoroughly research the market before even narrowing it down to a sector company. Even if you have found a suitable, stable company, check its past prices and see whether it can go lower than its current offering. A beginner should go for very low risk options. Don't expect a huge profit. A small profit is worth more than losing a large sum of money all at once. Thank you for this post. I'm new to share market, and since I have settled in jobs since last 3 years, I really want to invest high amount each month in various stocks. Is there any app, blog that I should follow every day? And can you, someone tell what accounts I will have to set up? Is Demat account something I should always have? You'll have to create a Demat account with a stock brokerage. We use Demat accounts to buy, hold and sell stocks. Check out Zerodha. They're the best broker for new investors. Greater than I really want to invest high amount each month in various stocks. Research enough about the stocks before buying. Greater than is there any app, blog that I should follow every day? There are plenty of websites that provide news about the stock market. But, following them every day is a waste of time. If we buy quality stocks, we don't have to keep track of them every day. https://Economic Times. India Times. com. https://www. Money Control. com. https://in. Investing. com. Good post. I'm a beginner, and I got an advice to divide my investments in 50-50. In equity and debt. As per my understanding, an index fund is a well-proven equity investment. But what kinda investment or product qualifies as a good debt fund? Greater than what kinda investment or product qualifies as a good debt fund? For the debt component of the portfolio, you have to choose debt funds based on the investment time horizon. For long-term investing, gilt funds and corporate bond funds can be good. Check out this post. https://www. Reddit. com. r. IndiaInvestments. Comments. Prebnal. _beginners_guide_to investing_in_the_bond_market. For more info. One can also choose EPF and/or PPF as their debt component.